Okay. My strategy entails the following type of market movement. Okay. Now you must understand the market moves like this in a basic diagram. It varies of how it does that, or this. There's varied ways that it does this, depending on what pair you're looking at. The market will never do this. The market will never do this. Let me just, there we go. My apologies, there we go. The market will never do this. Okay, who agrees with me? Have you ever seen the market do that? Just like a heart rate monitor. If you're alive, the heart rate monitor won't do this. The heart rate monitor is going to do this. Depending on how nervous you are or how, how much blood is pumping into your heart. I'm not a doctor, okay? But it does that sometimes, or that. And then that consolidates when you're calm, and then that, okay? So the way the market moves is the following. There's two types of movements that the market will make. You either get ascending movement or you get descending movement. Ascending structure or descending structure. Ascending structure moves in a fashion where the market is creating higher highs and higher lows. Okay? Descending structure moves in the fashion where the market is creating lower highs and lower lows, respectively. Okay? It does this in varied ways. It doesn't have to be exactly like a channel. Okay? It could be a wedge. So it doesn't necessarily have to be in this type of formation. Okay? This is a ascending channel. Okay? And in this case over here, we have a descending channel. Now, it does not have to create a channel, and it doesn't have to always hit the top or the bottom of the channel, and you must expect manipulation at the highs and at the lows of the channel, just as you would expect manipulation at the highs and at the lows of the day. A very important concept to take into account. The market is going to artificially raise or manipulate prices at these areas. Why? Because there's a lot of selling or buying interest. There's going to be manipulation. Now, I am not a stop hunt type trader. I believe in manipulation to a certain extent. I don't base my entire strategy on manipulation. You have to take structure into consideration over everything else. Just like the sun revolves around the earth, just like the earth and the sun and all the planets are within a galaxy. The galaxy is structure. The sun is a part of the galaxy. Earth is a part of the galaxy. The USA is inside of Earth. Texas is inside of the United States. You have to see structure as the almighty surroundings of what you are doing. Okay? So, going back to the types of structure, this is the way the market works. You're going to see it for yourself, and you can backtest this for years. Okay? I promise you, the market goes from an ascending, it will go from ascending to descending, ascending to descending. You just need to target the specific type of movement to base your entries, and that is where my strategy comes into play. Now, where is this movement? Okay, this movement occurs at one specific, very crucial moment on the market. I urge you to draw this. And before I continue, you need to backtest. And whatever I am saying, I urge you to not believe and to base this on your own research. I'm going to say that again. I want you to take everything that I'm saying as a complete fallacy. This is not true. Conduct your own research. I've shown you the graphs on the group. The graphs don't lie. So far, in a period of 36 hours, 3 setups, FOMC was called on a strong dollar before the announcement was made, 24 hours in advance. You do your own research. And if you want to join a group where you are prioritized and your knowledge is prioritized, send an email and we can discuss things. There is limited space. But like I said, take everything I'm saying and conduct your own research and come to your own conclusion. So the movement that we capitalize on consists of the following. You will get a structure, okay? Don't ask me how many points it has to have, and is it 3 points, the second point, the second point and 3/4. It's irrelevant. The market will not abide by a certain number of touches, okay? The market knows when people are going to sell. The market does not like retail traders to capitalize on big moves. Okay, it's just how it is. There's going to be manipulation, and they will most likely stop you out before the move is made, or the move will be made during Asia when you are asleep, or you don't expect it. Do you understand? There are certain methodologies that the market makers use to try and, keep the retail herd away, okay, or to take your liquidity. Okay, or to use your money to fill a big order, then manipulate, then go the direction. There's a whole host of ways, in my opinion, on how they do it. Okay, but this is the structure of the market. Now we capitalize on this move. You have a predefined structure. You wait for the break. The break out of structure will, if it is a confirmed break, it means that new structure will form. Remember what I said earlier. The heart rate monitor can't do this. So if the structure was ascending, what does it have to do? It has to go to descending, and then ascending, and then descending, and then ascending, and then descending on a macro perspective. Okay? So picture it like that. Now, we have the break. We capitalize on this position here and this position here. This position here is the buy in the case of a ascending to descending structure, to take it up to create the first lower high. This buy here secures us in the event that this move up is in fact a false break and it goes back into structure. We still got this buy to hold us all the way through. Okay? If it rejects here, we close out this buy and we look for the sell on double confirmation with rejection at this vicinity here, confirming a lower high, and then we just ride the trade all the way down. I don't look to enter here. I don't care there. And I really don't give a damn about here. Why? Because what's going to happen at these areas, everyone is going to adapt to the fact that this is now a downtrend. All the retail traders are going to look to be selling over here. You're going to get this happening. False breaks. I'm not interested in this. I don't want stress in my life. I'm going to take the buy over here. I'm going to take the sell over here. If there's rejection here, we take the sell, we close the buy. It's a type of hedge, okay? This is taught in my course, okay? Setups are sent to capitalize on these movements. Now, this break has to be a certain type of movement on a certain type of time frame, and there has to be factors that have to be met. I have a checklist, and I send out these setups to my group. Okay, so with this being said, we're going to now go over to the descending to the ascending type of nature, to the type of capital, to how to capitalize on that type of break. So we have a descending channel. Okay, we have a break. We take the sell over here. We take the buy over here. And we ride it all the way up. Should this be a confirmed break? We take the sell over here. If it does drop down, multiple positions, okay? Close out a majority of those positions as it goes down. Stop loss in profit. If it goes up, hits our take profit. We've already got the trade. We've hedged the two. Do you understand? Or you close out this entire position. If it falls back down, you've still got the sell over here. You don't take the buy over here because there's no confirmation. I've got a specific entry strategy that entails confirmation on a specific time frame at structure. It's taught in the course as well. Everything is categorically taught to you one-on-one if you are a silver or gold member. Okay. If you have any queries regarding membership, you can email info@ForexEduPro.com. I will write it out later, but let's just go over to real graphs now. If you have drawn this down, this is the entirety of my strategy. So let us now go over to the real graphs. First graph I'm going to show you is going to be the GBP-JPY. Okay, now you always start looking at the macro before you move down to the micro. Always, always, always. The macro moves will always have precedence over micro. Look at this. Look at this. Okay, so we had an ascending channel over here. Can you see? Now remember what I said to you earlier. It doesn't have to be a channel exactly with parallel lines. It can be a wedge. This is a ascending wedge. It's still creating higher highs and higher lows. We wait for the break of the wedge. We take the buy over here. We take it up to there. We take the sell. Boom, bada bing. You've made yourself $1,200 pips. What's so difficult about this? The only thing that's difficult about this is your ideology is so misconstrued that you are reliant on signal providers and you don't have, or you don't believe in spending money on proper education. You are so unaware of what the market is doing that you don't even know that that's a sell and that's a buy. You're looking to buy here. You're looking to sell there. In nonsense. Nonsense, nonsense, nonsense. I urge you to continue paying your signal provider, and you can listen to your 30, 40, 50 pip bullshit on a daily basis if that's what you want to do. However, none of you in this channel would be here if you caught that sell and if you caught that buy. And I wouldn't be explaining this to you if I didn't know how to do that. Okay? So this is my strategy. I've just proved it to you right now. There's the break. There's the buy. There's the sell. 1,200 pips. What's happened right now again? What if you took the sell over here? You've got manipulation, false break. Can you see? Now you've got a potential Another false break. This isn't a bullish engulfing. We're on the weekly. Okay. So, you know, you're quite of a mess over here. Okay. So what do we do from here? Okay. From a structural perspective. Well, we've had this break over here. We've had it reject this 149.5 area once, and it's rejected it again. That's a huge double rejection on a weekly time frame. So from a price action point of view, this is definitely not bullish out of structure at this point. Okay, it's made a double top. Okay, so it's bearish. Okay, so in terms of a structural perspective, from a structural perspective, we're not looking at, you know, the break out of this, and we're looking to take the buy on the higher low. We're going to be zooming in on a lower time frame and looking for alternative opportunities in terms of structure. So let's do that. So I'm going for from the 1 week over to the 1 hour immediately. Okay. So we've got this structure over here. Broke through the structure and it's moving quite fast. It's moving in a very fast nature now. Look where it's holding support. I've never moved this line once. I haven't moved the zone. It's holding support at my zone. There's a double bottom. Okay, what has to happen now if this is a descending structure from ascending? On a micro perspective, okay, it could create a lower high. 200 EMA right over there. Can you see how it just matches for the last drop back down? Potentially. Okay, price action needs to be observed over here with session timing. It's also taught in my course. Session timing is extremely important. So that's the GJ. As you can see, you can apply structure on any time frame. The lower time frames are more violated. Okay, you need to be in and you need to be out. The higher time frames, you zoom in to your lower time frame to get the entry. Okay, so structure plays a role in any time frame. Now, I want to show you the dollar index. Okay, before I move on to the dollar pairs. Look at this. I have never changed a single line here, guys. I haven't changed a single line here. And look how it's just respecting my structure. Look at this. Remember the whiteboard that I showed you? Descending structure. There's your break. There's your sell. There's your buy. All the way up. How did we trade FOMC? We had an internal structure within a macro structure, which is also taught in my course. So here we have a ascending structure. There's the break. We took the sell over here, all the way down. That was called. Go look at the public group. There's the break. Here was FOMC. We took the buy on the dollar, where we sold the Euro USD all the way up. We sold the AUD USD. We sold the NZD USD. We've now closed all our positions today. Why? Because look where the DXY is. It's at the top of the structure. So simple. So simple. Let's go over to the Euro USD. Where is my Euro USD? Here we go. So let me first change it to 1 day. Okay, so on the daily graph. Ascending structure. You see, ascending structure. There's the break. There's the buy. There's the sell. if you missed both of those, or if you missed the sell over here, we called this sell, by the way. This sell here was called in line with the GBP USD around the 16th of October, if I am correct. There we go, 16th October, yes. We called that. Why? Because it's the break, the first touch to the new structure, the new lower high. If you missed that, we caught FOMC over here. Why? Why are we looking to sell? Because we have a descending structure. I expect a false break, straight down. That's exactly what happened. False break. I love it when they do false breaks. I love it. It's taught in my course. Let's zoom into this on a lower time frame to further analyze our FOMC setup. Our FOMC setup went exactly as sent. Exactly. It's like I'm a magician. We're on the 1 hour time frame. Same methodology, same strategy. Structure within structure. What's this? We have a descending channel. Can you see? There's the break. There's the buy. We took this buy as well all the way up, 100 and something pips. We took that buy. Haven't moved the line once. Ascending structure, what happens? FOMC consolidation, break. And sorry, I just gotta pop up. Excuse me. There's our break. What has to happen after the break? Now remember, this is FOMC, so you know you've got a lot of volume here, and it doesn't necessarily have to retrace all the way. However, we had the break. I took my sell from here. I took my sell right over there, all the way down after the break. I could have entered a lot earlier. I was preoccupied at the time for a brief period of about 5 minutes. I had something to deal with. Came back down. I entered on the pullback. Why did I refer? Why was I basing? I traded a very big lot over there. Why did I base Euro USD? Because DXY is the inverse of the Euro USD. 60% of the dollar index is the euro. Structurally, the DXY told me. It told me what FOMC was going to do. So simple. That's 3 setups, 400 pips in 36 hours. What pairs do I trade? I only trade these pairs: GBP JPY, GBP USD, USD JPY. I rarely trade the NZD USD. I only did that for FOMC. I'm going to take that out. AUD USD and Euro USD. Why do I only trade those pairs? Because they have the lowest spread charges. They're the most liquid pairs, and they create the most visible structure because they're liquid. If you want to go trade your exotic pairs, you're not going to get nice structure. You're going to get dismal structure. I will show you the GBP NZD for an example. Can you see? Structure is very dismal. Breaks out. You look at this. It's not a liquid pair. It's a slow-moving pair. That's why I only trade these. I do not trade the USD Canadian dollar. I refuse to trade that pair. I do not trade gold. These are the only pairs you'll see me trade. Now, I'm going to show you oil, Brent oil. Big money, big money if you applied my logic. Ascending structure. At this point here, this point here, this point here, this point here, you would have had this trend line drawn in. Break. Sell. If you missed that sell, I called this sell over here. I will find that call for you now. A member actually sent me to analyze Brent oil for him. He wanted to trade it. I sent out an analysis. I will find that analysis. Oh, there's the Euro USD. This was 24 hours before FOMC, or what? I think it was the morning of FOMC. Okay. I expect a consolidation. There's the break of this structure. Pull back down. It exactly respected my 1.1360. That's a liquidity zone. I will teach you that in the course. Came back up. Next opportunity to sell, down. Remember this, 1.13602. 1.13602. $1.13602, sell. You don't listen to me because you want to trust the signal providers with the thousands and the hundreds of thousands of members. Why don't they drive Lamborghinis? Why don't they drive Lamborghinis, the members of the signal groups? Why? Don't trust me. Don't trust me. Go and pay your membership for your signal provider. Don't trust me. Please don't. I've just shown you a complete lie. I've photoshopped all of this. Don't trust me. 1.1360. You sell over there as per my analysis. It was sent to the group. 140 pips. Not even a 15 pip stop loss would have been too much. Could have even used a 10 pip stop loss. It's a 13 to 1 risk to reward. Don't believe me. I don't have a lot of members. I don't have a lot of members. So don't believe me. Go with the masses. Go with all those members that are driving Lamborghinis right now. Let me go show you the GBP/USD. Huge position last month. Huge. Called right from the top. Before I do that, my apologies. Let me take you to, there we go. There's the dollar index. We called this break out of structure. Take the buy there. That means you sell the dollar at that point. And that was the Euro USD sell over here. Okay, that was a sell over there. There's the break. Somewhere over here was FOMC. FOMC. There's the break. This first red line was the FOMC announcement. There's the break. On the red zone, on the liquidity zone, exactly. Pull back, sell. Boom. And that was the break. FOMC, sell. Let me show you where my, there's a dollar index called over here, all the way back down. There's the break. There's the sell. Here was oil, November the 6th. Here's structure, lower high. with session timing. I've got an entry strategy. I am not divulging to the public group. It's too long. You need to have one-on-ones with me. I need to explain the entry scenario to you one-on-one. I have a specific 3-point checklist. It's not as easy as just waiting. There's a specific entry checklist where session timing is taken into consideration with manipulation, with confirmation. Okay? That is taught to you in my one-on-one. Here's oil, up, down. That went from 73 down to 68. It's big money on oil. 150 contracts. You could be in anywhere from $3,000 to $10,000. Let me now further engage you on something that's going to blow your mind. Okay, and there will be a question answer session just now. I'm going to show you, where is it? We had it over here. Okay, let's go AUD USD. I'm gonna show you the AUD USD and then the GBP USD. Haven't moved the line once. Look what it's doing. Exactly. I know the exact movement of the market. So let's go look at the AUD USD on the daily. Remember, higher time frame first, work your way down. We're not really interested in this. We're interested in what's been happening over the, structurally, has it sustained itself? So we have a clear descending structure, as you can see. Okay. Descending structure, what is that? It's structure that creates lower highs and lower lows. Okay. So we have this descending structure here. Now, we took the buy over here on a micro perspective. When I say micro, I'm talking about structure within structure. It's taught to you in the course. Okay. I will take you to that setup now. Just finding the setup in the private group. Give me 2 seconds. There we go. Okay. There we go. So this was the AUD, sorry, this was the Euro USD. Let me take you back. Okay, I will take you to the AUD USD just now. Let me just walk you through it over here. Okay, so this position over here we took. I'll explain it to you rather visually. So it was a micro position. So we were looking at the 1 hour, 15-minute time frame. Okay, so we had structure within structure. We had a descending channel, then we had this descending wedge. As you can see, we had a descending wedge. Then we had structure within structure within structure. Okay. And we had our signature trade over here. Break in this liquidity zone over here. We had the the higher low over here, and we took that all the way up. This position here was called as well. It was called on the false break, back down. This was FOMC. We closed this today. 100 plus pips. So simple. even over here on the GBP/USD. So we have the break. If we go back to our setup, we took ascending structure, break, buy. Sell. We took that. That was very long ago. We took that position over there for about 250 pips to the bottom of structure. We then had this buy over here. So even if you did not take that buy, we had the break, the sell, the buy. Can you see? The break. If you even didn't take that sell and you just wanted to capitalize on the new structure to the top over here, this was the target area over here. Here's the break. You wait for the higher low over here, and you apply my 3-point checklist with session timing. I'm not sure which one we took out of those two, but we did take one of them. Okay. We then had this scenario over here. We then had this descending change to this ascending. And then we had a reversal pattern causing a break, the buy over here. Otherwise, we had the break from ascending from ascending, it broke. This was descending. So it changed from ascending to descending. Okay, remember, it doesn't have to be spot on. Okay, it was an ugly structure over here because this was Brexit over the weekend. So that's why this kind of falls out of nowhere in terms of this structure here. Okay. However, you still have to apply structure. So we had this ascending, we had the break. So, sell. So when the market does this, where it breaks and it just continues going up, okay, it's very hard to capitalize on a buy because there's no exact, pullback. Sometimes the market does that. Okay, I don't like those types of trades. That's why GU wasn't taken for FOMC. We didn't take this. The type of price action here, it wasn't nice. It wasn't the type of price action I look to trade. So let us go to the quickly. Let us just go to what I wanted to show you on the S&P 500. We have ascending structure, break, lower high. First lower high, we take the sell. Break. First higher low, we take the buy. Break. First lower high, we take the sell. What has to happen now? It could continue going back down. pull back to create another lower high to bring it back down. We don't look to buy in this market until we get that break. We buy the higher low. Let us go and look at, I wanted to show you a huge trade. Where was it? It was GBP NZD. There's going to be a question and answer session on 5 minutes. There we go. It was this one. Okay. There we go. Perfect. Okay. So I don't trade this pair, but I'm just showing you what this type of ideology is capable of producing, what type of setups you're capable of, capitalizing on. So we have this impulse move. We have this structure formed on top of the impulse move as a reversal type pattern. We have the break out of this structure. The break, the lower high, all the way down. We going to look at UJ quickly. I haven't moved a single line on this. Look how the market is doing exactly what I expected it to do. I haven't changed this since I did analysis on this on the 24th of October. That was a trade we took. All your signal providers took my UJ setup from here. I took it from there. My team took it from over there. Okay, so we got this. Then you could have taken the buy here, and then here was the actual sell, down. The break, what's this called? This is called the lower high, down. The structure here was not very nice emotionally because you would hold a position, it would come right back up, you'd be scared. So emotionally, it wasn't the best of structures for a trader to go through. But we took it from there, down. I didn't bother after that. The way it was, retracing with the yen and the risk on, risk off, it was just too volatile. Very volatile movement, wasn't interested. However, at that point in time, I had this analysis. I even think I sent a setup on the break, this move here, that the buy was there. I think I sent that. Let me just verify. Let me just bear with me whilst I just verify that for you. Because I do want to be showing you facts. I don't want to be, just telling you that I sent the setup. I want to show you the setup. Just like I show all my setups in a public group. But don't believe me. Don't believe me that I'm photoshopping everything, okay? This was on the 1st of November. I'm very, very sure that I sent a UJ. Just give me 2 seconds to find that for you. Go. Okay. Let me first show you this trade over here. We took this one over here. Here's the proof for that acclamation. Don't believe me. I'm photoshopping this. Use your own strategy. You know what you're doing. You are a professional. You know exactly what you're doing. Don't listen to me. USD JPY, 22nd of October, 112.950. $112.950. We took it from over there. So it didn't exactly go up to 112.950, but it was readjusted to 112.89, 112.9. We took it after the second hit over there, all the way down. If we go back to my setups, I want to find that. Just give me 2 seconds. Okay, I'm unable to find it, but you get the idea. Okay, exactly what I've been portraying the whole evening to you. We have a situation where we have a predefined structure, we have a break, and we have the buy. So I'm going to switch over to question and answers now. Now remember, this is just a brief overview. I don't have enough time to explain to every one of you in detail as to what the exact entry over here was. Okay, there is a checklist, and there is a checklist. There is an exact entry strategy. Okay, in addition to my setups that are sent on a daily basis to the group, there is that support level there. But understanding that type of structure on the market, the type of movement that I capitalize on, is the point of this webinar. If you want to learn more, you can join my private group and I can start to educate you one-on-one. So I'm going to open up the channel for question and answers, where I can answer any direct questions you have. If you have a question, you can just type in the chat that you have one, and I'll unmute you. How much is your course? Okay. So Jack, do you want me to unmute you so you can talk? Do you want to use your mic? Jack, can you hear me? Okay. So let me just Jack, is your mic working? Okay, no problem, no problem. Okay, so how many positions do I usually take on the breaks? Okay, so let's look at this setup on the AUD USD. Okay, so remember, we are looking at this setup here that was sent, this buy over here. Okay, let me just find that in the group for you. Let me just find that in the group for you so we can revert over to that. Sent on the, okay, there we go. Perfect, I've got it right over here. So I'm all going to give you a sneak peek into the private group for 2 seconds. Okay. Just give me 2 seconds while okay. So let me just there we go. Okay. Okay. So just give me 2 seconds. Just 2 seconds. My apologies. Okay. Okay. So this was the setup. AUD USD setup long on the 30th of October. We targeted this break with step-by-step updates. We targeted this break, Jack. That break there. Second touch, didn't reject, it broke through the second time. This was the break. Now, because it was on such a micro scale, I didn't know how much higher it would go for us to take that sell. So I wasn't really interested in the sell. I was more interested in the buy at this point. The buy is more juicy because this very well contained structure just got brokered to the upside. I didn't know how much higher it would go up before the sell came, before we could take that sell back down. And it already created a higher low. A higher low over here. That the sell was, it wasn't that lucrative. And with session timing, it didn't really match. So it wasn't a sell here. In terms of the entry, we took the entry over here with my checklist. How much positions did I take? Well, depending on the take profit. So I usually enter 2 to 3 positions. One, I would enter one position on a lower lot size on the confirmation I'm looking for. Between 2 to 3 positions. Second setup, a much higher lot size. Third setup, huge lot size. Third setup is short term. I'd close my third. So I work my way down like this. I'd close my third, my big lot size, in and out intraday. Second lot, I would assess and also close intraday. First lot, I'll keep open. And that's where I would set stop loss to TP and just let it run. So usually this could be a 1 lot, 5 lots, and a 10 lot, depending how comfortable. Could be a 1 lot, and 2 lots. Always on confirmation. Depending on how strong the confirmation is on my checklist, I would have based, maybe I'll just enter one position. It depends. It's objective. It's subjective to market conditions. But that was the trade. As you can see, 30th of October, AUD USD. Don't believe me. Don't do my course. I don't know what I'm talking about. 30th of October, there was the buy right over there. And we took that for buy for $200 pips. went 200 pips. I closed over around here, the top of structure, around 172. But it did go up 200. Can you see with my method, you know where your TP levels are? Okay, so entry position number 1. Okay, entry position number 2, entry position number 3. Big lot trade closed out over here. Lower lot and the first lot left open to capitalize on all of that. TPs were then brought up. So I have 3 positions, or 1 to 2, sometimes 2, sometimes 3. The one is used to make the money today. The other one is used to sustain the trade. Okay. So if you have any queries regarding the price of the course, remember, my course is one-on-one. I develop a relationship with you. I am a very good support agent because I worked as a support agent professionally. I was employed to work with 400 very high-end clients. Have you ever had a trade go against your lots? No. No, I haven't. Why do I say I haven't? I don't stack in unless I have the confirmation on a higher time frame. So if it is a confirmed bullish break, there's no reason not to stack in for myself. If it's not a confirmed break, I don't enter. Any setups that we send and it doesn't have a confirmation, there's no entry. It's a voided trade. In my group, we don't have failed trades. We don't take the trade. It's not taken. I think in the period of 2-3 months, I think I've had 4 or 5 voided trades. I think if I had to go on the top of my head to a percentage ratio of the pips accumulated, it could be well over 3,000 pips, even more. I'm not even sure. In terms of a percentage, I think it's definitely above 80-90%. Okay. I don't know those exact stats, but what I can tell you is that the setups that have been sent out are a lot more than the voided setups. Now, I specifically stipulate voided for a reason, because we don't take the trade, there's no confirmation. The confirmation is categorically and unequivocally taught to you one-on-one. So one-on-one, Zoom sessions like this, taught until you understand it. Until you understand it. You are taught my entry scenario. It might sound confusing as to how does he know when to enter. I promise you it's taught. There's 3 checklists you go through. If it doesn't, if your 3 checklists don't match up, you don't enter. You don't enter the trade. It's taught to you. In terms of course pricing, the silver and the gold, you have monthly subscriptions. So silver is a 3-month package. Gold is a 1-year package. Then we have the monthly package where it's not as one-on-one. It's more of the setups and you do your own work. It's 90% your work, 10% a Zoom webinar here and here. I do try and fit you in, but priority is given to my silver and my gold members. Does anyone have any graphs or any other further questions? Do you want me to go over? Do you want me to go over a blank? Do you want me to blank analyze a graph that I haven't looked at in months? Let's do that actually. I like that. Let's do that. Okay. I'm looking for a buy right now on the AUD USD. Okay. So before we can assess a buy, what we have to understand is that look at the daily structure, okay? From a daily perspective, we've had a false break. higher time frame serves more precedence. So before we can confirm this structure, what I want to see is bullish movement from here, and I'm only going to be looking to take a buy on the second touch after I've got confirmation that this is going to hold. So the bullish, the pullback for the third touch to the trend line to take it up as the next break up to this level. Maybe a retest over here. Okay. So before I'm looking for a buy right now, it's too risky. You've got a lot of selling pressure over here. Okay. So even to sell at this point, you need to wait to see if this is going to hold. If it doesn't hold, so simple. That's what we're looking for. So you'll know I adapt to market conditions. I don't assume. I know where this market is going. It's descending. Remember that. I can't say that I've got a microstructure ascending, that it's going to go up now. You've got this descending structure here to work with, and you've got the potentiality of a false break. So before we can look to buy, I want to see bullish price action, the pullback on or near my trend line, to take that as the buy, either on the break completely up or to retest this high here before actually makes its big move back down. The dollar index right now indicates that we could see some bullish movement based on the dollar index. Now the dollar index 70% euro, sorry, 60% euro. Okay, so look at where the euro is. Look at where the euro is. Very, very low. Okay, very, very low. Look at the euro, huge, so low. So it's not going to be as easy as a bullish engulfing, my friend. It's not going to be as easy as that. Okay, you must understand that the market's not going to make it easy for you. You have to understand that we're going to get manipulation over here. So there's going to be artificial price to grab liquidity before, makes its move. But I want to see any bullish price activity here. A pullback with my 3-point checklist. I will send that setup if I deem it applicable to my group, but it's very risky at this point to just assume a buy. Apply the 3-point checklist on bullish activity on the pullback, on the trend line, with session timing. I'm going to go now and I'm going to analyze a blank graph for everyone as if it was you that was analyzing this graph. So let's go look at Australian dollar, Swiss franc. Okay. I don't really like the safe haven pairs because they're very slow moving. Very, very slow moving pairs. Okay, I don't like Swiss franc, and let's look at a cross that's not safe haven. Let's look at GBP. Let's look at the Euro CAD. Let's look at the Euro CAD. Okay, GBP CAD. There we go. It's on GBP CAD. Okay, let's look at GBP CAD. So we're on the daily. NZD USD and Euro AUD. Okay. So starting from over here on the GBP CAD, on the daily perspective, we're going to pretend that this part of the graph is not visible. Okay. We don't see this part of the graph. Unfortunately, I've already got my analysis here, so it's a pretty giveaway, but let's just back test this one, and then I'll go over to NZD JPY and Euro AUD now. Let's pretend this side of the graph doesn't exist, okay? So let me just set this up nicely for you. There we go. Okay. So at this point, we've got this structure. Okay, it's descending. We're looking for the sell. If we don't take the sell, we're looking for the break. So somewhere this structure's going to break. So we've got this low point over here. So I'm immediately interested to plot down a horizontal line at that low level of demand over there and over there. Okay. So if we do move it, we can see that over here, we zoom in, it was this level over here, this blue line, which was this demand level over here that reacted off. So immediately after seeing the reaction, immediately after seeing the bullish reaction from this area, there's your bullish engulfing, pull back, up. Immediately seeing that type of activity, if I was applying my strategy per se, I would wait for the break. Boom. Boom, 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 bada bing. Don't believe me, I'm photoshopping this. There's the break. Okay, there's your break. Look for the sell. Okay, so you've got the sell. Now, you look for the buy. Break. Heavy manipulation over here, grabbing liquidity. What's this? The way that this broke out of this structure here, it was a clean giveaway. This was the new higher low for new structure. That was the buy. And you could take that up all the way. Take that up for 2,000 pips. Same thing over and over and over again. We had this, you see, if you take the buy here, you've got false break. Risky, dangerous, 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 dangerous. First hit, up. Let your trade run. Break. Sell. Boom. Don't even have to look. Boom, 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 bada bing. Thousand pips. Why was that the sell? If you had the structure drawn here, it was very, it created a nice structure there, but you must understand that you're using levels in another structure. So you have to expect this to violate. Okay. Now, if you did it like this, that's fine. It's the ideology that is important. The thought process of you knowing that there's going to be a lower high over here somewhere for you to take that sell is all that counts. The accuracy of your trend line is irrelevant. Okay, so we've got the break. We have it go up. Now, anyone drawing that trend line over here got caught. My checklist, if you applied my checklist, you would have no confirmation there. I can guarantee you that there's no confirmation there for you to take this trade. Here is your confirmation. Pin bar, rejection, double confirmation in the form of a bearish engulfing, and boom, bada bing. Boom, bada bing. So simple, yet so advanced. Because you want to spend your money on signal providers, 800 pips. And you don't want to spend your money on proper education, one-on-one mentorship. So if you want to continue to blow your accounts and for the price of a gym membership, okay, to have 3 months of one-on-one mentorship that's going to change your thought process on the market, in addition to the setups that are centered on the group, it's an investment in yourself. Now, let's look at the structure. This is why I don't trade these pairs, because, you know, it's in a range. It's range bound at this point. It's still descending, but it's range bound. Can do that very well. Or this could be the break. I'm not interested in this because I don't trade this pair. Very simple. Let me just go back to the chat. Do you ever add positions on the mini pullbacks during the new trend? Yes, you can. You can take the trades on the trend lines or on the structure of the new. You can take trades on the new structure. However, remember what I said. The structure is very vulnerable to manipulation after that first hit because it's got the attention of all retail traders. And there's lots of liquidity at the tops and at the bottoms of structure. That's where you apply my inner structure strategy, which is also taught to you, where you put structure in structure. So you can trade the structure within the daily structure, 100%, just on a lower time frame. The same concept applies. Look at this graph. Think of this graph as a 15-minute graph. The same thing applies. You're not going to get this nice price action though on a 15-minute graph. The way the market creates structure on the higher time frames is a lot more respected than on the lower time frames. But if you apply this on a 1 hour, 4 hour, and it looks like this, it's the same concept. Wait for the break. Take the sell at the top. If it's from descending to ascending, or take the buy on the confirmation that it's a confirmed break. Remember, it doesn't always have to break. It can fall right back in, and your buy could be at jeopardy if you don't apply my 3-point checklist. Okay, so let me go to the NZD-JPY. I want something new that I haven't analyzed before, so you can see me analyze it. Let me just see. There we go. NZD-JPY. Perfect. I haven't done this pair before. So pay attention, please. You're going to see what I do, what's going through my mind as I look at this graph. I'm on the daily time frame. Immediately, I'm on the daily time frame. I want to see the structure on the daily. So I can see that we had a very nice, ascending type of structure over here. Okay. That got, broken, or there was range bound here and then it broke. So a definitely descending structure at this point. So from that point over there, could go there, okay? And then from this point over here, could go there on the daily time frame, okay? So within this structure, I'm going to be looking for more points, more clues. I'm a detective trying to solve this crime. Definitely see a 4 hour, 1 hour nice structure over here. So I'm going to start here, just mark this off there. Perfect. That's all I need at this point. Brilliant. Break, sell, buy. Break, sell. Now, look here. Daily 200 EMA was broken, confirming this structure was definitely valid, and it's not going to be like this. Just based on the 200 EMA. The 200 EMA followed my upward trend line over here. So I'm definitely not taking this into consideration that this is going to, do that. This is a valid break, 100%. Break. I'm looking for this now. I want to target this point here. Something over here I want to target to take it up. Can you see? I've already planned this. I want to take the higher low. False break. Or up here. I really don't care what happens here. I want to take it from here to there. It's very simple. From here to there. Very simple. What is going to be this trade to the upside? You're going to work with the lower time frame structure. So on a lower time frame, could be having a nice little channel, works its way down in the form of a bullish continuation flag to the upside. Okay, so I urge you to look at this. I'm going to show you something over here. I'm going to show you something over here. This is my pattern list that's on our Google Drive for your reference. So we have a bullish continuation. Entry number 3 is an entry point, or entry number 2. Entry number 2 is the break and this on a micro level now. Okay. So if you want to learn how to do this, as you can see, it clearly makes sense. Okay. This is my email address. Info at ForexEduPro.com. We have silver 3-month package and a 1-year package, or we have our 1-month package. I will include a full free silver membership for you for the first month, one-on-one service, one-on-one mentorship with a monthly package should you wish. Okay? From this webinar. So if you are interested, okay, send an email with the discount or the coupon code FE1. Okay, FE1. My EMAs are very specific. Okay, very, very specific, and it's taught in the course. It's private, unfortunately, because it relates to my strategy. Can you see how my EMAs pertain to the structure, respects my structure? Okay, the fact that it broke through the EMA here gives me confirmation this is a 100% confirmed break, in my opinion, based on this. It's taught in the course. I can't divulge that. It's related to the strategy. It will be unfair to private members. So you can email info@ForexEduPro, and with the coupon code saying that you attended the webinar and FE1. So FE1, and you will get silver one-on-one membership with a monthly fee. The monthly fee is $120, and you get the silver membership for free. Alternatively, you can look to take the silver membership at a discounted rate too, with the coupon code FE1. If you have any further questions, okay, you can email info@ForexEduPro pertaining to membership. Otherwise, look out for the next public webinar. I will be speaking to a few of my members now on one-on-one. And thank you so much for joining. And I will speak to you, hear from you all soon.